You're hacking your way through a thick jungle, following the instructions of a sage you found on YouTube, a BitBoy. You're carrying your bag of coins on your back, looking to trade and increase your booty. And then you find it, one of the trading temples the BitBoy told you about, the one called ByBit. You approach the merchants and begin to trade, but as you start making transactions, you find that the cost of doing business is much higher than you expected. This is complicated, just like the BitBoy said. And now you're trying to figure out how to trade without getting hit by the merchant fees. Welcome to the jungle of crypto trading. Sharpen your machete and balance your scales. I'm going to explain what trading fees are and how you can avoid getting tripped up. Let's get it. Welcome to BitBoy Crypto, home of the BitSquad, the largest crypto community in all the interwebs. My name is Ben. Every day on this channel, I show you how to make money in crypto. If you like money and crypto, then make sure to hit that subscribe button. In this video, we take a look at the jungle of trading fees you'll encounter while leverage trading and why ByBit is one of the best values on the blockchain. Leverage trading is what novice day traders graduate to when they want to take their trades to the next level of profitability. It's an inviting view into a luscious tropical valley of gains. But don't go into the jungle without your bullwhip in hand. There are more traps and pitfalls than a diamond mine run by a creepy death cult. Trading on leverage means you are borrowing money to trade with more than you actually have. The horror. Long or short, you set your leverage amount on ByBit. You can do anywhere from a measly 1x to a whopping 100x. What does that mean? Well, 1x trading $10 means you're trading with only the funds you have in your exchange wallet. And any profits you take are what you put in, no leverage. It's just normal trading. Contrast that to 100x leverage, which means your $10 trade is borrowed 100 times what you have. So your $10 trade now has the power of $1,000. So you make $1 in profit at 100x, you get $100. And that's something you can tip your hat to. But be warned, if you take on any level of risk, any leverage exchange, including ByBit, will impose a liquidation level relative to your risk. 100x incurs a very small window of error. So if you make a trade and the price drops just a few percentage points, you could get kalimad. Or liquidated. And all your funds go away. And now you're poor. Don't trade at 100x. I personally leverage trade at 30x and I'm comfortable with that, but that's just me. This isn't financial advice. You have to do proper risk management while trading. 30x isn't going to be right for beginners. I go into lots of details about ByBit leverage trading in this video that you can see by clicking above. So leverage trading is great for gains, but it's important to understand the fees that are associated with such high risk, high reward trading. ByBit is a business and they charge fees to keep the lights on and provide the best trading experience in crypto. That said, they have the lowest fees in crypto trading and they're very transparent with them. But before we get into the fees, I want you to understand how ByBit tells you what the actual prices are. And also, just a reminder, if you want to sign up for ByBit, you can do that by visiting bitboycrypto.com/deals. We also have a great ByBit review you can find under the reviews tab. ByBit uses a system called a dual price mechanism to prevent traders from falling victims to manipulations happening on a given day. Due to market manipulations, the market price on a futures exchange may deviate significantly from the spot price, resulting in a mass liquidation of traders' positions. Remember, your liquidation level is relative to your leverage. Liquidation is automatic. In addition to costing traders large amounts of their hard-earned money, market manipulators also destroy the general public's confidence in the entire crypto exchange industry. So ByBit isn't messing around when it comes to finding its customers accurate pricing. Dual price mechanism is the bullwhip and fedora combination of mark price and last traded price. For perpetual contracts, the mark price refers to a global spot price index plus a decaying funding basis rate. Mark price can be considered as a price that reflects the real-time spot price on the major exchanges. ByBit uses mark price as a trigger for liquidation and to measure unrealized profit and loss. But this does not affect traders' actual profit and loss. Only when the mark price does reach the trader's liquidation price is the trader's position then liquidated. ByBit uses Kraken, Gemini, Coinbase, Bittrex, and Bitstamp as their price indexes. Last traded price is ByBit's current market price. The last traded price is always anchored to the spot price using the funding mechanism. This is why the price on ByBit is unlikely to deviate significantly from the spot market price. Now that we've evaded the many pitfalls and we've secured the sacred idol of pricing, let's hop on a seaplane and trek to the island of fees to search for another priceless artifact, the ancient funding fee abacus. Funding fees are one of the ways exchanges stay in business. They take a cut of what you put on their exchange. Them holding money on their exchange is a risk and requires overhead like people to manage servers and locks on doors. ByBit's funding fees are very low, like 0.01%. That means if you're putting $80,000 into your trading account, you'll pay $8 to do so, so not bad. But let's get to the real treasure and fees you'll see the most often: maker fees and taker fees. Maker and taker are old-timey words that come from Wall Street. That means a trader is either making the market more liquid by putting money into the exchange with a market order, or the trader is a taker, taking funds and making them illiquid by tying them up with various limit orders, stop losses, or any other order type that doesn't immediately get filled. There's a little more to it, but that's the difference in a nutshell. Makers put in orders that are filled instantly. Takers put in orders that have requirements before they get filled. The best part about maker and taker fees on ByBit is that all market orders aren't just free. ByBit actually gives you money back. It's true. ByBit gives all market orders a 0.025% rebate. They do this to encourage the most amount of liquidity on their exchange. By contrast, ByBit charges takers a 0.075% taker fee on their trades. It's an industry low by a long shot when factored in with the maker rebate they offer. These small percentages seem trivial, but they're not. Just like any good adventurer, make sure you're timing your jumps between the deadly wheels of death and rolling boulders, keep your bullwhip handy, and always stay on top of the merchant fees. That's the breakdown on ByBit and the fees associated with trading. Now head on over to bitboycrypto.com/deals and click on the ByBit link for some sweet sign-up deals. Comment down below with your market forecast. What are your long and short entry points? If you haven't yet, make sure to hit that like and subscribe button. It not only keeps this video ahead of the YouTube censoring algorithms, but it helps grow the BitSquad. That's all I got. Be blessed. Boy out.
BitSwap is the hottest new way to trade tokens. Crawling all the top decentralized exchanges, BitSwap will get you the very best price and value for your trades. BitSwap is changing the game. Try it now at bitswapdex.com.
Great video, dude. That's really good. That's really strong.